Hello, everybody. This is Brandon, Galaxydoc. This is Galaxydoc Markets, formerly from Rampage Trades. And boy, I have a doozy for you. We got Amazon earnings coming up in about a couple of hours as we speak. It's about 2:15 p.m. and I wanted to get this out so that we can give you our perspective on what we think is going to happen. So it is an earnings preview. We're going to go over some charts and our trading perspectives. Date is April 30th, 2024, not 2204. That's a typo. I'm sorry about that. Here's our disclaimer. Pause it, read it. If you agree, please move forward. All right. So basically, last quarter, you know what happened? They lost about 3 cents on their earnings. That was the first miss of the EPS for the first time in a long time. And Amazon did a funny thing. It kind of sold off, and then by the time the market opened, it gapped higher. Now, this is like 2 quarters in a row of a gap and go higher, and expectations are sky high. We have inflationary pressures, consumers are strapped out, and apparently, their stalwart was the AWS, and that was slowing down on their last report. Okay, so it's a great business. They're expected to grow their earnings by about 31.63%. I do believe that that's going to be hard to meet. However, I think based on accounting tricks and their growth levels and good management, I think they're going to be able to meet those numbers. The question is it going to be enough for this market that right now, as I record this, is basically having a conniption fit about Yellen talking about the inflation being here to stay, and it's going to really cut into their margins. However, it is Amazon. And as far as Amazon goes, so does the market. And we have another earnings coming out on Thursday. Apple, I think they kind of flip-flopped their positions this time. Usually it's Amazon reporting on Thursday, unless I read it wrong. But regardless, we got the information. They're expecting, um, you know, pretty lofty expectations, and it is trading near at the top end of the range right now. So let's talk about their earnings history by quarter. So this is the current one. Their expectation is 81 cents. Last time they expected 73, and last time they missed by 3 cents. In February 1st, 2024, that was for the Q4 2023. So the most recent one, they gapped higher and went higher and higher. And to everyone's surprise, again, it's pretty consistent. Reported EPS and earning consistent estimates are same. They beat by 19 cents and it went higher. And so when we look at the 1026, which is for Q3 2023, 58 cents of earning, this was very good numbers, and obviously they went higher. Okay, the question is, can they keep this up? So let's look at this. So here's some of the analyst expectations. Lows at the 70, highs at 78 for about 73 cents expectations. And I do believe they're going to beat it, but is it going to be enough? Just about everybody that's bought Amazon has already bought it. Insiders are selling like crazy. And the market is coming to grips with the fact that the interest rate cuts are not coming. And so that is the question. Again, on Q2 2024 report, 79 cents. High estimate was 101, and it was 90 cents, and they beat that handedly. So, are they going to beat? They generally do, but if they miss, look out below, right? So here is the Amazon from, here is February 1st when they reported, and you can see just about what kind of a reaction that it had. It did sell off into the earnings, and just like it's kind of doing right now, but realistically, that was at all-time highs, and it just gapped higher and then moved higher as it went. Okay, so that's historically what we can expect happen in the last couple of times. Again, selling off into earnings. Oops. Selling off into earnings right down here, and then gapping higher and going. Okay, that was the Q3 report, and they blew away estimates. The AWS was strong. So what can we expect right now as we speak on the Amazon earnings? So let's look at our current chart. So the Amazon chart on the daily is nothing short of bullish, right? I mean, it basically pulled back. and everyone thinks, and I did this earlier this morning about Amazon. Everyone thinks this is so bullish, this candle formation right here. Okay. And basically, it's kind of formed this weird triangle. It's a descending triangle. And is it going to break up or is it going to go higher, hit that 89, just like Microsoft and Google did? They reported stellar earnings and they're selling off, as it happens. So, there could be cases made for both. However, if the market continues to come to the grips with the fact that what they priced in for the markets of having 3 to 5 interest rate cuts, I got news for you. They can't cut. If anything, I think by July, Fed may be raising rates at this rate. I'm not sure about that, but I think they'll just continue to jawbone. But this is what's going on. My perspective on this is that there's some divergences forming right now on the RSI. However, the MACD is trying to make this bullishness, with the MACD histogram going higher, and MACD trying to create this bullish cross. CCI, however, is divergent, but as a whole, everyone thinks that this is the bottoming candle, and I don't believe that. I think they just found bottom, and then we had that rip your face off relief rally that I've been warning people about. And so let's look at the weekly really quickly. And so these are kind of the target levels if we are to go down. But there's divergences. It looks much more bearish than before. MACD has formed a death cross. Histogram is coming down. CCI is below the bullish level, and it's basically divergent. Okay. When we look, though, the thing that you really want to pay attention to is this situation where with the PPO ADX is forming this bearish formation. And so over the longer period of time, I believe that Amazon is going down after earnings, but it may pop a little bit post earnings, just like Google and Microsoft did. So what we got is Amazon will most likely meet the expectations fundamentally, but 2 quarters of gap and go means that it's due for a pretty significant pullback. The economy isn't doing well, and I think the retailers in general are coming to grips with that. And I don't think Amazon by itself, even though they dominate, are going to be immune to that. I think they're going to find that this shoppers are buying more essential goods as opposed to luxury goods or discretionary goods. Okay, and what's questionable to me is the AWS. I mean, that's their bread and butter. That's their baby. Okay, and that has always done well. The question is there going to be slowdown in the consumer activity or the behavior, and that will determine what's going on going forward. Okay, there could be a pop, but what I'm advocating is that there are insiders selling. They're just dumping left and right, but that's not any different than J.P. Morgan Chase, Apple, or anywhere else. Okay, the question is, are we going to be moving higher as we speak into this earning, and should you front run this? My feeling is I generally don't want you to front run. If you've made a lot of money over the last few weeks, especially the last couple of weeks, trading this counter trend bounce, it might be worthwhile to take a shot at it, but not financial advice. But the way I look at it is it's always better to wait, but there leaves a possibility of maybe a gap and a go to the downside this time. It just doesn't have 2 quarters in a row of these gap and go behavior, and the markets are coming to realize that basically the Fed's not going to come to their rescue, and we're going to find that out because of that on the FOMC announcement tomorrow. Okay, so bottom line, there's a lot of meat on this bone if you want to short it, but you got to be careful and know the levels that you want to short. Do you front run this earnings? Rarely works out, right? I mean, honestly, it's just the way it is. Beware of Amazon's capability to bounce before earnings. It's not doing much of that, but it's not really doing anything bad either right now. I do believe that post earnings, the target, if it's going to go bearish, is about 170.15. Upside is fairly limited. The most it could go to is about 185. Okay, I didn't put that there. Consumers are strapped, folks. Waiting for a pop in the morning. I think that's the best play. But if you want to get ahead of it, make sure that you buy some time on this. But beware of that front running that's happening. The earnings has an expected move of about 14 points. Okay, so IV is pricing in at 109.74. So if you front run, understand Amazon's IV is normally about 23 to 30%. Okay, so they're expecting a fairly decent sized move right now. There is some gamma instability. Gamma's, it just basically controls how volatile the price movements are. So I think the best options from my perspective, do your own research, is 510 expiration. And if you want to find out more about what strikes that we may be taking as a group, click the link below and look into joining our membership. Do your research. This is price for perfection. If you're a bull, be careful. Okay, thank you so much. I just started this new channel, so please like us, share us, and above all, comment. I enjoy good and bad, but please no misinformation. Okay, we're not, we're doing this as a service to you all, but keep it respectful. Thank you, and get some alpha. Okay, and you want to join our community? Inquire right over here at thecoachbrandonprotonmail.com. All right, let's get some alpha.